Hello students, I have come with a new module, Final Accounts Module 10. In this module, I will be explaining two topics. One is unearned income and depreciation. You know that depreciation is very important. Almost all the problems, depreciation adjustment will be there. Similarly, unearned income also. When you go for interviews or admission interview or when you go for job interview also, these terms are important. They will ask you this, unearned income. So now what do you mean by unearned income? Income earned in advance. See, for example, sometimes rent or commission we received in advance. See, sometimes the tenant is going out of city or out of town. They may give the rent in advance. So that meaning it may be related to next financial year, but you have received it. So what will be the adjustment? So two adjustments will be there because unearned income, it will appear outside the trial balance. So first adjustment you have to remember, it will be subtracted from the income. Second is it will appear as a liability in the balance sheet. Now we will explain one problem, and in this unearned income adjustment I will explain. So from the following trial balance of Mr. F, prepare the trading and profit and loss account for the year ending 31/3/22. First is capital 1,30,000, drawings 5,160, purchases and sales 1,50,000, and credit balance is 2 lakh. That is will be sales. Debit balance will be the purchases. Purchase returns, if purchases is debit balance, purchase returns will be credit balance. That is 6,000. Sales returns. Sales is credit balance, so sales returns will be debit balance. That is 4,000. Carriage inwards, this is an item for the trading account, 1,200. Commission received, it will come in the profit and loss account, 1,400. Wages and salaries, it will come to profit and loss account, 17,000. Debtors 44,000, it's an item for balance sheet. Creditors 30,000, bills receivable 10,000, bills payable 8,000. These are all the items for balance sheet. Rent 2,000, general expenses 12,000, legal charges 400, buildings 50,000, income tax 5,000, bad debts 800, cash in hand 10,840, cash at bank 47,000, opening stock 16,000. Total of the trial balance 3,75,400. Now, two adjustments. Closing stock was valued at 30,000. So, closing stock you have to remember trading account credit side, and it will appear as an asset in the balance sheet. Now, commission received includes 400 for the next financial year. So, from the commission received, we will reduce 400 and it will appear as a liability in the balance sheet. So, now if you see the problem, trading and profit and loss account of Mr. F as on 31/3/22. To debit side, you know that it will start, all the entries will start with 2 in the debit side for trading account and profit and loss account, and credit side it will start with buy. So debit side to opening stock 16,000, to purchases inner column 1,50,000 because returns value is there. The final value only we will take it to the outer column. So purchase return 6,000, outer column 1,44,000. To carriage inwards 1,200. Now credit side by sales 2 lakh, sales returns 4,000, outer column 1,96,000. By closing stock 30,000. So credit side is higher, 2,26,000. That we will write on both sides. Now we will balance. So we will get the gross profit on the credit side. So now gross profit is 64,800. So now we will come to profit and loss account. So profit and loss account, wages and salaries, debit side 17,000, rent 2,000, general expenses 12,000, legal expenses 400, income tax 5,000, bad debts 800. Now credit side, by gross profit brought down 64,800, by commission received 1,400, less commission received in advance. See, this is one adjustment. This is received for the next year. So this will not be related to this financial year. So you have to subtract from that. So 1,400 minus 400, outer column 1,000. So total of the profit and loss account 65,800. So when you balance it, you will get 28,600 as the net profit. That we will add to capital because it's net profit. If it's net loss, we will subtract from the capital. Now balance sheet, capital, inner column 1,30,000 and net profit 28,600. Total is 1,58,600. Less drawings 5,160. So outside the column 1,53,440. Creditors 30,000. Bills payable 8,000. Commission received in advance. I told you this is a liability that will be for the next financial year. So 400. Debtors, asset side, debtors 44,000, bills receivable 10,000, buildings 50,000, closing stock 30,000, cash in hand 10,840, cash at bank 47,000. So total of the balance sheet 1,91,840. Now depreciation. This is the second item I am going to explain in this module. This is very very important. Depreciation meaning decline in the value of fixed assets. Depretium. This is how from the Latin word it's introduced. That is, D means asset and depreciation meaning decline. So decline in the value of fixed assets. See, if you are using fixed assets, it is meant for a long time use in the business. But as you use it, the value of the fixed asset will reduce. So this will be a capital loss. It has to be adjusted in the profit and loss account. What will be the consequences if depreciation is not adjusted in the final accounts? See, when you want to replace the fixed asset, it will not be a small investment. You have to invest huge amount. So for that, you have to set aside certain amount every year based on the usage of the asset. Then only you can replace the asset when the original asset will use for its lifetime. That meaning you have to replace the asset. So that is what you're going to do, depreciation. So depreciation has to be adjusted. In almost all the problems, depreciation will be there. So depreciation, two adjustments are possible. One is depreciation appears in the trading account. Then only one thing you have to remember, then it's only one adjustment. It will be debited to profit and loss account. Second thing is, if depreciation is given as an adjustment in the outside the trial balance, then you have to calculate the depreciation. In the problem, they will mention that 2% or 5% you calculate depreciation. So that value, you know that if it's appearing outside the trial balance, two adjustments will be there. The first one, it's appearing in the trial balance. Then only one adjustment that you're taking only to profit and loss account. Since it's appearing outside the trial balance, two adjustments are there. The calculated value of depreciation is debited to profit and loss account. Second thing, in the balance sheet. So then it will be subtracted from the asset value in the balance sheet. So two adjustments. Now problem 2, the following from the following trading and profit and loss account of Mr. G for the year ended 31/3/22, prepare the final accounts. Buildings 20,000, cash in hand 12,000, machinery 30,000, capital value 1,20,000, purchases 1,20,000, purchase returns 8,000, sales 1,50,000, sales returns 5,000, opening stock 22,000, salaries and wages 15,000. Carriage inwards 1,000, debtors 40,000, creditors 30,000, discount allowed 600, discount received 1,000, investments 40,000, drawings 5,000. This has to be subtracted from the capital. Commission, it's a credit item, that meaning it will come in the credit side of the profit and loss account, 4,000. Income tax 4,000. Interest received 1,600. Total of the trial balance 3,14,600. Now additional information, closing stock was valued at 34,000. So closing stock, credit side of the trading account, and it will be an asset in the balance sheet. Now provide 5% depreciation for buildings. This value you have to calculate. Provide 2% depreciation for machinery. This value also you have to calculate. This whatever the calculated values will be debited to profit and loss account, and it will be subtracted from the value of asset in the balance sheet. Since it's appearing outside the trial balance, two adjustments. Now let's see the problem. Trading and profit and loss account of Mr. H as on 31/3/22. To opening stock 22,000, to purchases 1,20,000 less returns 8,000. Outside the outside column it is 1,12,000. Now by sales 1,50,000 less returns 5,000. Outer column 1,45,000. By closing stock 34,000. So credit side is higher, 1,79,000. So when you balance it, you will get gross profit 44,000. This you will transfer it to credit side of the profit and loss account. By gross profit brought down 44,000. By commission received 4,000. By interest received 1,500. By discount received 1,000. So total of the credit side is 50,600. To salaries and wages 15,000. To discount allowed 600, to income tax 4,000, to depreciation buildings 1,000, machinery 600, total 1,600. Now here also credit side is higher, so when you're balancing, you're getting net profit that is transferred to capital account. This is the balancing figure 29,400. Now, if you see the balance sheet as on 31/3/22, capital 1,20,000, add net profit 29,400, total 1,49,400, less drawings 5,000, outer column 1,44,400, creditors 30,000. Now, buildings 20,000, less depreciation. So, depreciation value we have to subtract from the asset value in the balance sheet. So 1,000 you reduced, this we have debited to profit and loss account also. So outer column value is 19,000. Similarly, machinery 30,000, less depreciation 600, outer column 29,400. Debtors 40,000, investments 40,000, cash in hand 12,000, closing stock 34,000. 1,74,400. So these are the two items I want to explain in this module. One is unearned income. Second is depreciation. So I'll repeat, unearned income will be subtracted from the concerned item in the trading and profit and loss account. Usually it will be in the profit and loss account. It will be a liability in the balance sheet. Depreciation will be there in almost all the problems. Depreciation you have to study in detail when you come for graduation, auditing. In the chapter, in the subject, you have to study depreciation, different methods of depreciation in detail. So the topic is very important for your future studies also. You have to remember that. So depreciation, two types it can come. Either it will come in the trial balance, then it will be debited to profit and loss account. If it's appearing outside the trial balance, it will be debited to profit and loss account. The calculated value will be subtracted from the asset value in the balance sheet. So this is what I want to explain in this module. Happy learning. Thank you.